Hey, it's Richard with Matthews Wealth Management. We're at the downtown Greenville office. So we moved out of Fountain Inn, waiting to get into the new building. Stay tuned for some, footage of that building and as we go to upfit and everything. But in the meantime, we're meeting with clients down here. If you're a client, you're familiar with this room. But anyway, we're working on July 2022 as far as a market update. So this is the video where we kind of go through the quotes as well as my rant. So I've kind of watched these videos and feel like maybe let me take a little bit out of it and keep it factual and just kind of prove my point, because I think it's in there, and I think my frustration showing through is probably not the best for the prospects out there. I know clients love it, but y'all see me in client meetings, so that's good enough. Anyway, this is a good one. So, hunger has great positive value to many people. Indeed, it is fundamental to the working of the world economy. Hungry people are the most productive people, especially where there is a need for manual labor. That's the United Nations. So that's how we're going to run things. That's how we see the world is if you keep people hungry, you keep them working harder. Okay, let's continue. It gets worse. All right, I don't feel the pain of inflation anymore. I see the prices rising, but I have enough. I sometimes balk at the prices of things, but I don't find myself in a space where I have to make trade-offs because I have enough, and many Americans have enough. That was Mary Daly, the president of the San Francisco Federal Reserve. Trade-offs is an interesting thing to throw out there. You know, maybe printing money led to a trade-off for the people who don't have enough. But the mindset here, the elite mindset, because they're better than you, comes out from a medical encyclopedia that I looked up. Perfect, actually. Psychopathy, yes, psychopaths, describes a set of personality traits and behaviors frequently associated with the lack of emotional sensitivity and empathy, impulsiveness, superficial charm, and insensitivity to punishing consequences. Yep. All right. We'll continue to some more people that may or may not follow that definition, which, by the way, came from the Encyclopedia of Mental Health, 2nd edition, 2016. So, you know, we've redefined all of our psychology, and still, wait for the redefinition here. Let's continue. There are more people that fit that. This is a comment of someone who has never worried about where his next paycheck will come from. Elizabeth Warren, talking about, I guess that was Larry Summers, who was Obama's Treasury Secretary. So the former Janet Yellen under Obama. That's what she says about him is he's never had to worry about money, pot, kettle. I bet she'd say the same about me. I run a business. I know where my paycheck's coming from, my business. But yeah, she'd hold that against me, apparently. All right, we think it's time to go to a meeting-by-meeting basis and not provide the kind of clear guidance that we did on the way to neutral. Jerome Powell. A lot of issues here. Clear guidance, hilarious. It's transitory, guys. Meeting-by-meeting basis is also what Christine Lagarde did, and we'll talk about that kind of in the next section here. But my take, we have no idea what's going to happen. We've been wrong too many times. We're not going to put ourselves out there. That way, we can react when the crisis hits and we weren't really expecting it. So it's not that, you know, we just want to keep you on your toes now, and that, oh my gosh, we're at neutral. That's just laughable, by the way, and Larry Summers has something to say about that. A lot of people, it's not just me, guys. I represent maybe, let's be generous and say 15% of economists. Unfortunately, our 15%, the minority, is not listened to, and you'll hear that here in a second. So let's see, that was Powell being completely lost. By the way, neutral would mean to a point where fiscal policy allows for inflation to moderate and economic growth to increase. And 9.1% inflation 2.5% interest rates. You're not even close. Paul Volcker went to double-digit federal funds rate, and you're at 2.5, saying, we hit neutral, guys, and now we're not going to give the clear guidance. These people are clueless. Anyway, this is a good one. I helped pull this country out of a recession before, and as president, I'll do it again. That was part of the campaign, right, against Trump. That was in October 11th of 2020. Did you know there was a recession coming? I mean, the 15% of us did, right? I mean, it's pretty obvious, but I mean, don't act like you didn't know, because you basically called it, and you were right. You had to throw us into the recession with your energy decisions to be able to pull us back out with your spending. We'll get there. This is, I'm not even going to comment, guys. I'm just going to read the quote and go to the next one. That's not the technical definition, Janet Yellen. All right, the Federal Reserve is what this answer was in regards to. Answers to no one. Alan Greenspan, the guy that started all of this, by the way. Not a terrible guy, just didn't really get what he was getting into, and then you got the idiots that ran along with, keep printing things. So Alan Greenspan started it with the premise that he doesn't have to answer to anyone. Okay, this was in a tweet. So inflation is far too important a problem for the White House to keep making statements like this. That was the thing I read last month about, telling the gas station owners, lower the price, do it now, that garbage. So Jeff Bezos is doing this quote. So it's either straight ahead misdirection or a deep misunderstanding of basic market dynamics. Jeff Bezos. So that is, he's talking at the White House about their economic illiteracy, and who would have thought? I mean, these guys obviously studied economics and finance. Well, no, they didn't. Sorry, they're politicians. Okay, so who is advising the president on a shockingly naive price theory over a gallon of gas? And then a couple sentences later, is this just central planning now? Where's the White House going? So this was Jonathan Farrow and Tom Keene, Tom Keene is hilarious, by the way. I watch him pretty much every morning on Bloomberg. Not a big Bloomberg fan, but you get some good data there. You get some good storylines, kind of what's going to push things in certain directions. But Tom is a very snarky guy, old snarky guy, which is great. And I find it hilarious. They were grilling this moron. Her name is Heather Boushey. So the names are just perfect, right? I mean, like that's the hilarity of, you can't make this up, is their names just fall right in line. So the bougie person gets grilled by Tom Keene and Jonathan Farrow about, y'all have no clue about how prices work, right? And that's Bloomberg saying it. So, wow, okay. Let's see. The process is highly likely to involve some pain. But the worst pain would be in failing to address this high inflation and allowing it to become persistent. Jay Powell, again, your fearless leader of the money printer. So the process of what? What did we do? We created inflation. The process of fixing it is going to be painful. So consequences, right? Punishing consequences, right? It's going to be some pain, but psychopathy rears its head again. So, all right, let's see. And this was kind of interesting. When asked what to do, this was a great take. First, I would fire the Treasury Secretary. For everybody that doesn't know, that's Janet Yellen. She's an idiot. I think she's completely misled America. That's the governor of New Hampshire, Chris Sununu. That's an interesting name. But there's a bunch of other quotes I didn't have time to write up here because there's a lot of quotes. And this used to be just 2 quotes per thing, but it's just gotten out of hand. But it's amazing. It tells the story per month, what people are saying, so that later on you could be like, oh my gosh, the people who were in charge making these calls were completely wrong. I'm going to get to a great one. So first thing I want to mention, Harvard and Executor did an experiment, and this was Alicia Finley of the Wall Street Journal who summarized what this experiment found. This is shocking stuff for the elite. Earning a paycheck can give workers a sense of personal agency that encourages them to make better financial and health decisions. Receiving a handout may do the opposite. Shocking. Okay. So let's see, I'm going to save the best for last. Just a really great quote by Thomas Sowell that I wanted to throw in there because it pertains to what they're misunderstanding. And when I say they, I just mean the ones making the calls that have no clue. He said, transferring the fruits of human capital is not as fundamental as spreading the human capital itself. And we'll get into that in the next section. But, it's redistribution of wealth is not as important as generating wealth, which is production, supply-side economics, 15% of us. Okay. This was good. John Tammy says, inflation is a departure of currency price stability, nothing else. Exactly right. The price inflation situation is because the currency is worth less because of the debt, because of the printing, because of the money supply, because of everything we always talk about. So, broken record. That's why I want to get the tone out of these things, because it's just so frustrating. Let's see. Neil Kashkari, our favorite guy. Kashkari, however you want to talk about it. I actually kind of like mispronouncing their names sometimes. There's all sorts of ways to pronounce all these people's names, and so I find the parody, I guess, in how you say it. So Kashkari says, I'm focused on the inflation data. I'm focused on wage data. And so far, inflation continues to surprise us to the upside. Surprise, surprise. Couldn't have seen it coming. Surprise, nobody saw it coming. Wages continue to grow. Not enough. So far, the labor market is very, very strong. Cherry-picking data, maybe, but it's not. All right. Coming off of last year's historic economic growth and regaining all the private sector jobs lost during the pandemic crisis, it's no surprise that the economy is slowing down as the Federal Reserve acts to bring down inflation. So this is not a surprise now. It's perfectly what was planned. Maybe, because remember, it's malice or ignorance. They're both bad. So we've got, that was Joe Biden, by the way. That was your president. That was your commander-in-chief. So I'm going to do this one. This is a long one. Jeffrey Tucker. I believe this makes a lot of sense. Some people may not like this, but I like it. It was all kicked off by the most draconian and destructive public health policy on record. One that utterly shattered the liturgy of life. Liturgy? I don't know. Took away education for the kids who were forced to learn alone with masks, shuttered churches and civic meetings, mandated shots on an unwilling population, demoralized the labor markets as everyone was forced to take their place as essential versus non-essential, broke long-established market relationships, blew the federal budget many times over, and generated a savings-wrecking inflation that has utterly transformed expectations for prosperity and progress. I think that's pretty succinct, but some of the things in there are maybe over the top, but he gets the point across very well. So what I saved best for last on the quotes here, I don't bash this guy enough. Paul Krugman, idiot. Just an idiot. My God, you're going to love this, I hope. But look up everything that he says. He won a Nobel Prize. Like, he's always referred to in Bloomberg. He does op-eds, Wall Street Journal. People worship this moron. Like, this is the founding father of the idiots like Yellen and Powell, okay? Who's an attorney, by the way. But Paul Krugman, this is about how he's wrong about inflation, okay? He was wrong about it, but not that wrong, okay? Some warned that the package would be dangerously inflationary. Others were fairly relaxed. I was team relaxed. As it turned out, of course, that was a very bad call. I mean, it seems like he's kind of humbling himself to say that, yeah, he was flat out wrong, but dangerously inflationary. Let's see, who are those people? He continues. This wasn't a debate between opposing economic ideologies. Just about all the prominent players from Larry Summers to Dean Baker were Keynesian economists with more or less center-left political leanings. Yeah, you get it? You see the point here? This is the debate between the echo chamber. There's no getting in to have influence over common sense policy. If you think common sense is like a thing, it's not. It's specifically weeded out, right? And so it's only 15% of economists that think the way that I do. That's sad, y'all. Like that's, because it is the common sense side that's dwindled down from 50 to 15. And he admits it. Nobody's even asking the Austrians or the supply siders, you know, what do you all think? Could this create inflation? And by the way, in his entire apology or owning up to being wrong, never once mentioned the fact that we printed money. Had zero to do with the Federal Reserve. I guess it was just whether or not their stimulus, the 1.9 trillion, was going to be enough to spark the growth to pay for it. That's the thinking here. I mean, if they were able to generate value out of money, then they might run their own business. They probably wouldn't be involved in running a government, you know, where you get your revenue at gunpoint. So great. All right, just to clarify, this was Paul Krugman back in the 90s, late 90s, I believe. The growth of the internet will slow drastically as the flaw in Metcalfe's law, which states that the number of potential connections in a network is proportional to the square of the number of participants, becomes apparent. Most people have nothing to say to each other. By 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. Yeah, this guy's a moron. Why do they keep listening to him? So, yeah, we're going to come back. We're going to cover a bunch of data and talking points for the month of July, you know, and then we'll do the other two videos where we do M2, balance sheet, and asset performance. So, hope you enjoyed these. I did not, but yeah, we'll be right back. It's Richard. We're going to be covering here all of our talking points, and I'll try not to rant too much. Like I said, I want to change the tone a bit, but a lot to cover, so I'll just jump in as quick as I can. We found out in July that inflation is up again from 8.5% to 9.1%. Kind of along the way of July, people thought that meant it was over, that we've hit peak inflation. We'll see, right? But immediately after that, the Fed comes out and raises rates by 75 basis points to 2.5%. We haven't been that high since 2019 when it failed spectacularly, and that was only with $4 trillion on the balance sheet. Now we're almost at $9 trillion, so that makes a much harder, it's a harder way to deal with that in the economy. So the day after raising rates, they brought in some new information that we unexpectedly saw a drop in GDP. I don't know how unexpected it was, but I guess all the experts thought it would be positive after the 1.6% negative first quarter. It dropped another 9%. I think it was actually aiming at they were expecting a positive 0.5%. So really it was way off of expectations by percentage of percentage. But yeah, we didn't wait for that piece of information before raising rates by 75 basis points. So that should tell you how serious we are about actually doing the right thing and taking into account all of the data. So I want to talk about why the market jumped after we got a bad GDP signal here. And that's the theme of July that we'll see in the asset performance numbers is they took off. Everything went up except for commodities, which frustrated me. But basically, people think inflation's over. And the fact that we saw the shrinking GDP meant that now the Fed would have to focus on saving the economy, right? And we got to now start digging out of the recession. And the way we do that is we print more money and lower rates. So when we lower rates and print money, then the market goes up, and most specifically large cap growth. That's where it all goes. So, so it was, in my opinion, a very false reading of what a recession actually means. I think that the market in general saw that we're going to pivot, or the Fed is going to pivot quicker, meaning stop raising rates, which is wrong. So to continue, it's now August 8th, and so I've got a little bit of information since the end of July that I'm going to add here, because we have the jobs report, and the jobs report brings us back to reality. Job openings and turnover was down 605,000, which is the third worst ever on job openings. So if you remember, we were talking about excess jobs of 5.2 million more jobs than people looking over the past few months. That's now starting to shrink. And it might have been that some employers were wanting to post 2 jobs to get 1 actual worker, and now they're not able to do that. But with higher interest rates, obviously, we're not able to have as many jobs. It costs more to borrow and leverage and all of that. So, however, the new jobs report came in, and it says we actually added 528,000 new jobs to the economy, which was shocking. We were expecting, I think it was 250, so more than double what we saw of job creation. So we're now actually above pre-pandemic levels of employment. Does it feel like it? Nope. 3.5 unemployment rate. So this is as good as it gets, guys. This is a great economy. In fact, that was one of the things we covered in quotes, is that with our strong labor market, we're going to be far from hitting a recession. We can hit the soft landing and all of that, which is not true. The weird part comes in when we look at the household survey. Only 179,000 jobs were added. So what's up with that? How can the manufacturing survey have 528, but the household only 179? You're asking 2 different people about, are you employed? Are there jobs open? Are you looking? That whole thing. And I think we'll get to the answer here, but participation in labor force was down to 62.1%, which is terrible. If we go by participation rate, that's actually a better way to look at the labor market, but we don't do that. We actually lost 330,000 workers. So regardless of the jobs that are around, the workers just left the workforce, right? So I don't know, maybe they all retired, or maybe they just quit looking. Another piece is we had 5.2% wage growth, which is good, right? I mean, we want workers to make more money, right? Is that enough? Looking at a 9.1%, you make 5.2%, your real take-home income just shrunk. But what it's saying is that since all these people are leaving the workforce, it costs more to keep the same people employed. Then there's this weird little part in the survey. 548,000 people said they were prevented from looking for work because of the pandemic. Guys, it's over. Like, seriously, you've been vaxxed, right? Let's see, the real answer. This is where we're getting to the bottom line. There are now, the people who work are working more jobs. They're working fewer hours for each employee. The gig economy is starting to take off. And I think this is a big plus, honestly. For the economy, not so good. For the labor market, not so good. But for the type of economy that we have people that are generating more value and are valuing their abilities to produce more, which is requiring higher wages. And then also, flexibility. COVID taught us that we can stay home. We don't have to work in a cubicle anymore. So I think that's a good thing in the long run. The question is, what do we do with this? And so these new jobs added caused a major sell-off here at the first part of August. And really what we're seeing is that, we're not past peak inflation, right? That was why July was just a joke. And I'll show you the numbers in the other video here. But yeah, frustrating to say the least. But yeah, good job for all the multiple job holders out there. Keep going, keep building value for yourself. Let's see, this little piece was interesting. 65% of people that quit during COVID or whatever haven't returned to the same industry, and that's people going out to find something that they either are more passionate about or can provide more value in. So that's good. So for such low unemployment here, 3.5%, historically great. Food banks are seeing a spike in families needing food. So maybe we're reading the wrong statistic. anyway. 280 billion. How did that happen? That was a five-fold increase for this chips thing. We're gonna bail out NVIDIA, and they couldn't control their inventory very well during COVID lockdowns and get the ships into the ports, and so let's just give them $280 billion because that's what we need. And Tipsy Paul Pelosi has decided that buying a $5 million stake in NVIDIA right before this vote was a good investment. But just so you know, Pelosi did disclose that, and she didn't do it. Her spouse did it, so it's okay. All right, $780 billion is going to be spent. That's actually, I think, last night. Last night, the Senate finally passed that. It's going to the House, but $780 billion. So look, another trillion of spending, guys. That's great for the economy and inflation. Is now going to be used to convert us to wind and solar. It's called the Inflation Reduction Act. The Congressional Budget Office came back and said that this will affect CPI inflation by either a 0.1% decrease or a 0.1% increase. So it's aptly named, obviously. So during a food crisis, what we're going to do is we're going to take all these acres of land and we're going to put solar panels there that were made by slaves in China and produced with the energy of coal and then shipped across the ocean so that we can take up some farmland during a food crisis. Like, it's almost like you can't really be this dumb, right? There has to be a purpose behind doing all of this. I'll leave that up to y'all, but the savings rate's down half from what we were being able to put back in our 401ks in 2012. So that's going to be good for Social Security, obviously, if we even have that by then. But EU has been very interesting in the month of July. Christine Lagarde raised interest rates half a point back to zero. For those of y'all that don't know what negative interest rates look like, just sit back and think about it for a while. It is insane. But she came out with this thing called the Transmission Protection Instrument, the TPI, which is, there's so many jokes with that, but it's really a slush fund. It's to bail out Italy and Greece and Portugal and Spain and all these countries that can't balance a budget and do the same thing as ours. And so Germany, the real economic engine of the EU, is having to pay to bail out these other countries. So the day that happened, I was sitting there watching the euro versus the dollar, and it temporarily did a spike, which was very nerve-wracking. You can ask my wife. I was really angry. And within an hour, it plunged. I was like, there you go. That's what it's supposed to do. So, yeah, Europe is basically done. The next thing that's going to be really interesting as we get towards winter, are they going to come back and bail out Germany for the lack of energy? You know, they're going to need some natural gas and heating, but you know, maybe Italy, Greece, Portugal, and Spain just, oh, we got our own problems. So just watch for the drama of Europe to continue. Coal is at an all-time high, so good job, all you global warming people. You've now boosted the demand of coal. Iran profits are up 580%. That was actually, I think, just from February to April. That's ridiculous. And yeah, higher oil prices do that, but they're increasing their output and exporting it to China. They actually are the largest exporter to China now. And their overall budget, government budget, is up 48%. So that's a good regime that we really want to have more money to spend. Good job, green people. Russian oil made $20 billion in June with 250,000 barrels per day less output. So they're making more and producing less. They're down 7% on their production, so they're cutting their production, but they're up 13% in revenues. So I don't think that they're stupid. I think their finance guy is actually pretty smart. You've got Saudi Arabia, Turkey, Egypt that are joining BRICS, which is Brazil, Russia, India, China, and South Africa. It's already 40% of the global population, 25% of the GDP. So yeah, that's what NATO is ultimately going to be fighting against economically. And we'll see what kind of tariffs we put on that. But Saudi, I mean, I thought they were our allies here. I thought Turkey, a NATO member, was our ally here. Yeah, they're switching sides, y'all. If anybody in like control can hear this, you're doing it wrong. Maybe shift to a different different goal. Goldman Sachs is calling oil to go to 140 a barrel. I think that's reasonable. I think that might be low. I've heard some saying 330 a barrel, but that might be ridiculous. We'd have to print a lot more money before that happens. July 20th was a crazy day in London. Their electric costs, that basically they ran out of electricity, and so they had to emergency input some from Belgium, and it was a 5,000% markup on their energy costs for that day. Otherwise, they would have had blackouts. So yeah, it was hot. I mean, I think it was a record day on July 20th. So when it's cold, well, they don't have natural gas either. So just expect this stuff to continue because we hate energy. IEA, the International Energy Agency chief, says the EU needs to cut energy consumption by 20% to get through the winter. So just adjust your thermostats accordingly. Don't charge your cars, but buy them. Yeah, whatever. $2.8 billion was invested into fusion. So tokamak and First Light, those are actually, I've done a bit of studying on this. That is the answer, right? Everybody hates nuclear, and when it comes to fission, yeah, you got radioactivity of 3 Mile and Chernobyl, and that's terrible, but fusion's different. It doesn't necessarily have the byproducts of it, and they've been able to generate 59 megajoules this year, which is not more than what's going into it yet, but they were able to get some containment stuff fixed in there, so that's good. In fact, I think they said on average, $1 billion per year has been invested into fusion. If they got $10 billion a year, it's probably 20 years away. So instead of throwing it at solar panels made from coal and slave labor in China, maybe put it into actual science. This I just wanted to throw up here. This came out of some research I did. If we looked at the beginning of the U.S., when we came over and started taking over, in the year 1700, there were 250,000 Americans. That grew in 70 years to 2.1 million. Another 100 years, we had 40 million. In 1914, there's a reason we picked that date, 99 million people in the US. And I think the theme that we're hearing that is just flat out wrong is that demand is what's causing inflation. If people just didn't want to consume and drive and keep their ACs as low and get as much food and whatever, it's their fault. They're greedy, right? And just go back a little bit out of your first world comforts, then we wouldn't have inflation, right? It's a demand problem. So if we raise rates, we have to crush demand. Well, this was some pretty serious demand, right? Over that time period. What do you think the inflation looked like during that demand growth? Hardly any. In fact, there was a stretch in here of about 50 years with zero. That was the legit gold standard back then, where you didn't have a financial currency being corrupted by debasement. But ultimately, is demand linked to inflation? No, it is not. Inflation is just the fact that the price of the currency changes. It's literally all we're talking about here. What allowed this kind of population not only to grow, but to have a better standard of living over those years was growth, right? Without messing with inflation. So if we looked at a inflation-adjusted GDP, it would be through the roof during that time period. Well, we've had 0% growth, inflation-adjusted, over the past 20 years. Maybe it has something to do with how we manipulate our money supply. I don't know. But yeah, that was very interesting, just to destroy the ridiculous argument that demand creates inflation. That's not it at all. If you have supply, like these people worked. These people produced things, invented things. And anyway, they also didn't live as long. So that was interesting. But 40% of LinkedIn users are changing their employment status every 4 years. So just a lot of turnover. That kind of goes all the way back to job turnover and openings. But yeah, LinkedIn is an interesting place. It's I don't like it, but and you could tell if you go check my profile, I don't do much there. But it's kind of tied into this Gen Z and just the way that people are comparing their current place of work to their friends and peers and whatever. And I don't know, grass is always greener, right? So 29% of Gen Z people are still living at home with their parents and grandparents. So we've coddled them well, and they're just not going to leave the nest. I love this, and for ironic reasons. Millennials are to blame for inflation, says CNBC. I don't think that's necessarily true, but they're saying that because millennials have waited so long to buy a house and cars and move out and all of that stuff, which millennials are older now. They're not the kids. The kids are the Gen Zs, right? Like, I think I'm Gen X. Our generations don't keep up well with the newer generations. The millennials are much older, but now that they're spending money, making money, they're saying that there's too many dollars chasing too few goods. That's what CNBC came to the conclusion of, which I agree with. Just not the millennials. It's everybody. And the too much money came from the Fed. So, yeah, good premise. Just you didn't really put it to the right place. $4 billion in California rent assistance is going to go away. These 340,000 renters will be evicted, obviously, because it's California. It's a joke. It won't. Hoover Dam explosion. One of their generators, the what was it? The oil caught fire, and then it caused an explosion. And maybe because it was overheating, because Lake Mead is empty, which is a great metaphor for how energy is looked at, right? It's not about the fact that, oh, just let a little bit more water through, like we're trying to tell Saudi Arabia and OPEC to increase some output. There's just no water there. So the supply is empty. It'll be interesting to see what happens when it actually does empty out. And I think they found 4 bodies now that were at the bottom of that lake. Eggs are up 3 times as much as they were a year ago, which is a lot. I'm a breakfast guy. I love eggs and bacon, and I always go to Pork Belly Futures when I'm looking at commodities just to know what my bacon costs are going to be, and breakfasts are very expensive. Rice in India, which is the largest exporter, they export 40% of the world's rice supply. Their planting was down 13% for drought reasons, and so if we look at the fertilizer not being used and shrinking yield by 10%, we're also shrinking our planting by 13%, so more people will die. Yay. Oakland truckers are protesting against AB 5, which was owner-operator versus employee, and they shut down the port for a number of days completely, I think, which was interesting, kind of like the Dutch thing we went over last month. But freight spot prices are dropping. I guess that's a good thing for the economy, but it is a terrible thing for the economics of truck drivers, and part of another reason why they are not happy with also having to pay more taxes. China mortgage holders stopped making their payments. I found it interesting that China continues. They pay a payment before they build the house so that the house can be built. So they actually start their mortgage before they're living there. So when they stop paying, it's not only that their house stops being built, but the other guys that was actually being paid by that money, his isn't being built either. So there's a monstrous slowdown in real estate in China. I don't know how to say this guy's name. Michael Nowak, whatever. Greg Smith, Jeffrey Ruffo, and Christopher Jordan. Those are our friends from JP Morgan that manipulate gold and silver, and they will be going to jail if they are found guilty in a court of law. They allegedly manipulated pricing with some obvious things that they did. So hopefully justice is served. Unallocated gold and paper derivatives are up 500% in Q1. So we just found 5 times as much gold than what already existed, just miraculously, and printed it. Sound familiar? That's a little terrifying, honestly, but ask me about it in a meeting. AT&T earnings tanked. Guess why? People can't pay their cell phone bills, but there's no recession. I mean, that's not the technical definition of a recession. Pension Benefit Guaranty Corporation, which is there to back up failing pensions, itself is insolvent. And now that there's a study that 200 of their nearly 1,400 pensions are facing near-term insolvency. Let's bail them out. Print some money, y'all. $5.5 billion in daily stock buybacks are another thing that boosted all the gains in July. I think this new $780 billion, whatever we called it, it's Build Back Better in a smaller form. There are additional taxes for stock buybacks, so we'll see how that adjusts. But But that was a big factor. 5.5 billion per day in July was going to just buy back stocks. Lindsey Graham, Richard Blumenthal are jerks, and 77.2 billion out of 413 billion, which is 18% of all unemployment dollars spent from the federal level during the COVID lockdowns, were fraudulent. So somebody got those and they shouldn't have. So, I mean, what happens if a company just loses 18% of its cash on hand? People go to jail, right? Belarus threatens Poland, Pelosi threatens Taiwan, and then I've got a new video series we'll be doing. I'm going to talk to a guy about this. This is a great point. The U.S. default on bonds is coming. I've been talking about it pre-75 basis point hike. If you looked at the carrying interest cost on the 30 trillion in debt that we have when we were at near zero interest, it was like 300 billion a year that we paid out of our budget to cover the interest. Well, now that rates are where they are before the 75 basis points, we were at $800 billion of interest just for the year. And so if we aim at our 3.5% goal, which is garbage, it really needs to be more like 6.5 or 7. But even if we get to 3.5, that's a $1.5 trillion carry of interest costs per year from our budget. So that's half of our budget. So I guess we keep social and Medicare. We may need a military, but what happens to everything else? Like Department of Education, Department of Labor, EPA, like we just print it, right? Anyway, we'll have a good discussion on that one, but it's interesting. Bonds don't look too good. Anyway, that's it. That's the rant part. I'll dive into the next 2 videos on some number crunching, but yeah, I don't want to be too much of a jerk on these anymore, and I think we're actually going to be changing up the format of some of our market update videos, so stay tuned, and we will see you at the end of August, beginning of September.